Welcome to Markets Now. I'm Michelle Brooke with Scott Barlick of Koima Barlick, and we've seen kind of some mixed trade in both the grain and livestock futures already this morning. Maybe one exception, we're quite a bit higher here in the hogs to start off with. All right, so Scott, let's talk about the cattle market first of all, like we normally do. Market has been resilient. We went back up, made new contract highs in these live cattle futures here this week. So do you think we keep going here, especially if cash confirms higher?
Yeah, and thanks for having me, Michelle. It's been another great week for cattle. It's been a lot of fun. We're record highs. It's fun to celebrate the high cash, and it feels more of the same this week. We've got leverage on the producer side, so I think that cash market is what we're turning to give us that final direction. Are we going to get more push? Which that rally that we had, the substantial sized rally, we need that encore if it's going to stay at these levels. And I think that's what it's trying to prove. I got a lot of producers in the north going to ask that 220 for cash. Thinking probably more like a 218 is possible, but I think that there's some packers that need some cattle, and we've got that really good demand in front of us. So it feels good, and cash feeders have not let us down at all either. So cash is king. That's what's still pulling it higher. Like I said, with the rally that we've had, it kind of has to be for that encore, like I said.
So what do you think we could even throw at the market at this point that could wreck this rally? Because the S&P is now recovered, and so the market has been getting a little bit of a tailwind from that. Is there anything that could stop this rally? Because, man, we were so resilient even when we had the 20% pullback in the stock market.
Oh, there's always something, Michelle. Always something that could break the cattle market. So kind of keeping that in mind, I guess. I mean, right now it feels like, hey, we've got strong cash, and we really did divorce ourselves from that stock market for a while. I mean, we participated in the break, as all the markets did. And once the stock market started to hold, we were able to kind of leave that behind and get to some new levels. So what are the stories we're looking at? I mean, first rumors of the morning are, some problems at a boxing facility that the roof collapsed, use the word collapse. And then it's, oh, never mind. Maybe it's just a little wind damage. And all of those rumors, when you have a market at record highs, it's always worried about that outside factor that's coming in to say, hey, this is a scary moment. And that's how we feel. What's that unforeseen thing? So fundamental wise, we've got some heifers being kept for the cow herd. We're seeing 4% less heifers on feed. So that is it is happening. And is it because we're trying to grow the cow herd, or are we culling the cow herd so hard? I mean, that's a big debate that we're having, because your old cows that you're sending to town are worth a lot of money. When you can scrap together just a trailer load of junk, frozen ear, Popeye, and all that kind of stuff, and you can come home with $45,000 just from one trailer load, you're feeling pretty good about that. So you are seeing, some of that happening as well. The reasoning they need to keep heifers, but so we're gonna have to watch these outside factors. I think this is where I need to preach. I told you I probably would today, because we're scared at these levels. We are at high levels, and you're going to try to buy some break evens that are at 205. We know that there's unforeseen things that can happen, and what can you handle with a 205 break even, and that rug gets jerked, and we have a substantial reason to break from high levels. Can you make it through it? Can you do it? So I think you can be as friendly as you want, but I think it'd be hard for me to sleep at all if I didn't have any kind of floor underneath me. So I think it's time you got to have some of that floor protection on, because got to start thinking about the next generation. I mean, the size that we could break this market is that kind of level, just where we're at. So be prepared for that, I guess.
Right. And because of the resilience that you and I talk about, you can sometimes be lulled into complacence. So it's a really good point that you make to do some risk management here. All right. So let's also talk about a few other periphery things going on right now. CME came out with some new specs for not only limits, but also delivery specifications and whatnot. How will those impact producers in the market?
Probably not immediate impact that has to happen right now. So
No.
In the north, we at least saw the $1.50 discount get eliminated. during that October timeframe. So that, Worthing was the one. It was always Worthtober or whatever they called it on that hashtag. But they're complaining about the extra deliveries there. There has not been really a delivery on that, in that facility. It feels like since. I know that there has been a few, but it's been very, very light. So they were able to eliminate those. That needed to happen. Let's play fair here. And so that was okay. The other was the weight specs, maximum delivery weight of 1650. So anything over 1550 to 1650, I think there's some, some discounts that are going to happen, but that's a big critter. I don't know if that's really something that the market really needed to have a 1650 pounder to be able to be delivered. I mean, that's a big animal. So not sure I'm real excited about that. That's going to, maybe have a little bit of long-term effects on how high this market can go. And especially it makes you a little bit more scared to be long in that front month under delivery. When you have something that big coming at you, there's no wiggle room. They have to have somewhere to go right now. Yeah, it's not a problem right now with tight numbers, but what happens when we have a lot of numbers and you can't find a spot to go with them? That's really not the kind of animal that you want to get your hands on.
Yeah, no doubt. And we've been making up some of the shortfall in numbers. Slaughter's been tight the last few weeks. We've been making it up with the weight that you talk about. That kind of was proven out here in the cold storage report yesterday, wasn't it?
Yeah, for sure. I mean, we all know how we've been able to feed these animals. We've got a great winter, and we've got really high prices and high replacement prices, feeder prices being high. So it's been easy to, throw cheap feed in there, I guess, as well. So it's been easy to try to just put some extra pounds on this critter. Big calf, big check. That's what we're looking at. And you've got, over $2 cash. And even if you start to lose some of that efficiency, I understand, you're not going to get 80 cents cost of gain or $1 cost of gain when you have something that big, but you can still miss the mark by a long ways and still get paid for it. So we've been doing that. We haven't got our hands slapped yet. Eventually we know that can happen, but that's why you kill 2% less, numbers year to date. But still our beef production is level, looking at real close to year ago levels. So that's the impact that has had, and it's probably not going to go away. Every time we have these very large weights, we always think maybe it's going to pull back, but that's probably going to be a continued band-aid on, higher cost, continued, tough, ranchers getting old, all of those kind of stories. The reason the cow herd is as low as it is. So that's probably going to be a band-aid that's going to stay on. Now that we have the ability to make better genetics and do a better job, that's going to be more normal for us, in my opinion, to keep these critters at a large weight.
Yeah. So just quick, feeder cattle futures have not made new contract highs like the live cattle contracts did this week. Is that just a matter of time?
For me, yeah, I think we've got some northern sales. The auctions kind of dry up. They're all planting up here. The big runs have really slowed down. So you get a little bit more of a southern influence index for the short term here, but get some of these video auctions coming up, and let's see some of these fall feeder prices, get some more of that news into the market. And I think that's what we're gonna see, maybe push it through to try to test that 300 level. We're just too close. It'd be hard for me to say we're not going to go try it on. So and maybe it's just me hoping for it, but yeah, it looks like it sure could do so.
And the hog market is trying to recover here today after a couple of down days. And the de-escalation of this trade war with China that we're seeing is part of that story, but it's not all of it, is it?
Yeah, de-escalation. I think that's the right word to use. It's been, caught up in the tariff war. So now that's easing ever so slightly, maybe, still a lot of uncertainty there. We're not fixed. Yeah, that's going to keep going, but we're able to go back and trade some of this maybe where we sit right now. We months ago heard about the extremely high feeder pig prices, the isoines, what those were bringing were kind of mind blowing. And I think that's just how tight it was, the PRRS issues that we had. So we're in that window right now. I think it's just that tighter supply. We have the ability to push some of these a little bit higher. If we don't have any major issues, I think June can look at this gap above us, right here in the 105 range. So, I mean, there's room for it to go. When hogs trend, they absolutely trend, and that's what they're doing right now. So so feeling okay. I don't think that the export news, the weaker export news this morning, we all knew that, a couple of weeks ago, right in the height of the tariff war, we knew pork was not probably getting moved. Hey, now we can kind of look ahead and feel a little bit better about it. So it was able to react. We're getting through a lot of the resistance levels and room for it to maybe move a little higher in the short term here.
Yeah, and cash and cutout values are higher coming into the session today. China did cancel, I think, 12,000 metric tons of pork on the report that showed up yesterday. So hopefully we've got all of that behind us. Okay, let's talk about the grain trade. We're kind of mixed this morning after a higher session yesterday, led by soybeans, which the July finally got above the 200-day moving average. And what is, I guess, the real driver of this market right now, do you think?
It's been a little bit more of a head scratch, I guess, with soybeans leading the charge. I don't know if that in particular was something that I thought could do so. So the easing, the de-escalation of the tariff war, I think that's probably maybe just that simple. That's the reason we're getting some of the boost, because pork and soybeans, two big export kind of markets. Maybe that's what's helping push them out of the lows just here a little bit. Yes, soybean oil has had a 20% rally here in short order, so definitely could get some of the credit as well. But they're reacting pretty good. I mean, it's surprising that the old crop is doing what we're doing. It's no surprise that South America had a very large crop, and those beans are going to China. So in the midst of all of that, beans have been able to kind of fight off pretty well here.
Corn correcting yesterday and today after, I think, 4 down days. Is that market, or was that market just squaring up ahead of option expiration today here? And are we trading weather? Because is there concern about us planting more acres or not?
I think there's always concern. It's we're in that what's the weather doing time of year. It's maybe just a touch early, but there's been some areas that have been too wet to plant, and there's some areas that are dry and boom, done. I sit right here in Northwest Iowa, one of those areas that's pretty much done planting, getting everything wrapped up. Several of the farmers are done. Still a little left to do, but you get further to the east, and maybe they're just a little bit behind yet. So we're going to always have those areas. We're going to have, how are we sitting? So we've got some moisture happening right now. I think it's going to be pretty important as we turn the page that moisture stays on, so we're going to trade some uncertainty on the weather, in and out. I think corn probably would have had a little bit more fun here on the upside alongside these soybeans if it had not been for the wheat market absolutely, looking horrible on a chart and just grinding lower. So I think the corn still has plenty of issues to trade throughout the year. What our weather is shaping up to be. But yes, as far as getting acres planted, I think that also maybe part of the reason corn didn't go and beans did is because, hey, if we're going to get these planters rolling, we know that we keep planting corn. Could be part of the reason that it's late here just for a minute, as we've got the planters rolling ahead of schedule in a large part of the area.
Yeah, and that means a few less acres of beans may be also supporting the new crop beans. So lots of different things to work through here. All right, thanks so much. That is Scott Varlick with Varlick and Markets Now.